All right, good afternoon, everybody. Welcome. Let's make sure you're tuned in, you're turned on, you hear us all right, you see us all right. Well, you don't see anything just yet, but you probably see my screen. I'm not ready to show my face yet. It's not ready. All right, chat in where you guys might be joining us from, and we'll get started here momentarily. I'm just working through a couple of logistics issues on my side, and yeah, it looks like we're all good. So everybody hear me all right? Probably even see me now. Yeah? Okay. All right. With that, we're going to jump into this today. Let's again, awesome. I appreciate those of you that are actually chiming in where you are joining us from today. A nice group on. So by the way, that's only for my own curiosity. I'm sure people are scattered throughout the country, actually throughout the world. But yeah, it's always my own curiosity where everybody kind of joins us from. When we do these couple of Floridians in here, North Carolina, nice. So just watching. Okay, but it's like half of you guys are like in Florida. The other half are actually in North Carolina. That's awesome. All right, well, Florida, you're not too far from me. I'm out in the island right now of St. Croix. So California, about as far away as possible. I'm closer to somebody's actually in Portugal. Okay, I'm closer to Portugal probably than I am California. I'm all right with that too. All right. A lot of people moving to Portugal, moving to Spain. It's a place to go. Apparently, uh, everybody's getting out. So I was surprised to find out that I have a couple of friends that I traded with in Chicago, and just in the last few weeks, a few of them moved to either the islands, Puerto Rico, Caribbean. Yeah, it's pretty interesting. So people are definitely getting out. All right, so a few brief introductions. I know I'm only 5 minutes into this here, but I do want to make sure that we get things kind of squared away. A few brief introductions. First of all, throughout the course of today's presentation, you can ask questions. The other question that always comes up is this live? It's live. In fact, sorry, I've got my caffeine is in the way over here, so I do apologize, but this is live. We're actually in a live market environment. I only like to do these now during live market environment. It just makes it more interesting for me. I am executing a couple of trades in and out today. I'll take a couple of positions as we go through this. Let's get down to it. So we're going to talk obviously a bit about Ultima alerts and Ultima Trades, which is something we've been talking about just incessantly now for a considerable period of time. The reason being is it works. We're not going to change anything until something doesn't work, but we're going to discuss Ultima and Ultima alerts here quite extensively. It's a high probability income generator. Of course, we'll discuss that more. You are watching a TheoTrade presentation. My name is Don Kaufman. A risk disclosure. Okay, this is ours. This is not yours. No soliciting, no photography, no feeding the monkeys. I like that one. Housekeeping. A couple of housekeeping items. Look, I'm going to go through a huge amount. I have a lot. And anybody that's actually been to a presentation that I have done recently, every single time I do a presentation, it's dramatically different. I've added slides, removed slides, change it up. Look, Ultima is exactly what we're going to be talking about today, is an incredibly wide genre of trade. It encompasses a number of different strategies. And that's obviously what we're going to discuss. So look, shut the door, get ready, turn off Skype chat, close Facebook, focus. You're going to need to, because huge amount of education that I've actually packed into today's session. I'm going to try to pack it all into 90 minutes, maybe an hour. We'll see how fast I can go depending upon the number of questions that come in here. As I was reiterating from earlier, feel free to ask questions as we go along today. I'm reading chat in real time. So if you see me looking around at different screens over here, it's because this is a screen with a presentation on it. And this is actually you guys over here in chat. Over on the far right-hand side of me over here, we actually have none other than, well, the market. So I can see the S&Ps. So a lot going on. All right, where to start over here? Free auto expected move indicator. If you've ever tuned into literally any video that I've done, whether it's a nightly video, some just esoteric video that you've grabbed somewhere. But if you tune into any video that I've done, I talk incessantly about the expected move indicator. Stay with me right until the end of today's webcast. We will provide you a copy of the auto expected move indicator free of charge. It's a $500 value. And the reason I mention this is, again, I don't just feel strongly about it. It's an indicator that literally has changed, the way that we view markets. And it's something that, I could bring up screenshots. I don't like screenshots. I'm not the screenshot kind of guy, right? So I'll bring up like auto expected moves. One of the most shocking things is, look what we've been doing the last couple of weeks, right? This is now, look, that's 1, 2, 3, 4, 5, 6, 7. I literally just got off a live TV broadcast. I was just doing a TD Ameritrade TV less than 20 minutes ago, and we were talking about this range, the range that basically defines us all at this point. But it's going to be intense when it breaks. But again, you wouldn't normally see this without looking at these expected moves. And the expected moves, like you can see a range, but the expected move, it's how the option marketplace handicaps risk. It's just an invaluable tool. All right, this is why you're here today. So we're going to talk extensively about Ultima Trades and why they're so ideal for the current environment. Now, ideal for a current environment is an understatement. Like, there couldn't be a better environment than we're presently in, and we've been in this environment for the past 3 years. Okay, so if you're looking to potentially generate some monthly income, this is definitely going to be enticing for you. We're going to talk about a trading symbol that we use to create Ultima Trades. We're going to learn how and where you can find edge as a retail trader. That's something that, again, I'm going to discuss in quite some extent here momentarily. We're also going to talk about very high probability trades, but more importantly, and obviously more appropriately, when you do high probability trades, risk, okay, can be, well, considerable. We're going to actually show you how to mitigate or how to hedge, okay, from large losses. And we're also going to talk about what works for these types of trades. When I say products, what kind of products work for these trades, and what products are a recipe for disaster. So that's a little bit of the itinerary that may sound a little out there. You'll understand exactly where we're going here in just the next couple of moments. Here's a bit about me. So once again, my name is Don Kaufman. If you ever need to get a hold of me after today, we're very open to answering emails. Right. So this is support at TheoTrade.com. We use a common inbox. Just put my name in the subject matter. So I've been involved in this business since the late 90s. It's now 25 years. I have trouble saying that. I've actually been in the business for 25 years, but I grew up around trading. People always ask me how I got my start. I grew up around it. I had family that were in the markets. I followed in the footsteps in the late 90s. I had no intention of going to work in Chicago. I did. Shortly after I got my start in the business, about 18 months into it, I knew a couple people, some traders from the SIBO, Chicago Board Options Exchange. One of those traders was Tom Sosnoff, and I joined him. I was like employee number 13 of a company called Thinkorswim. I was in the executive team when we took Thinkorswim public in 2007. I was on the executive team when the company was purchased by TD Ameritrade in 2009. The deal was over $600 million. I signed a 5-year lockup clause. After 5 years, I exited TD Ameritrade. That was in 2015, in early 2015. I exited TD Ameritrade. We launched TheoTrade in early 2016, and well, I took with me a lot of my crew that worked on my team from TD Ameritrade. So from TD Ameritrade, from Thinkorswim days, we've got quite the crew here at TheoTrade. This was the entire educational arm, if you will, of Thinkorswim. We ripped them away, and here we are at TheoTrade. So one of the things you're going to learn today is everything that you learn from Theo, okay, comes from the basis of, we watched order flow, okay? We know exactly what order flow is, and what order flow basically breaks down to, it's your trades. And that doesn't make a lot of sense to people, but you have to understand that the education that we provide here, and more importantly, the trades that we provide here, are from watching billions and others' mistakes. We know exactly what works and what doesn't. One of the things that people forget is if you run, at the time, was the largest options order flow in the entire industry. If you run that, imagine the accessibility you have okay, to seeing what works and what doesn't. And again, what you're going to learn today comes from watching literally billions and others' mistakes, and the knowledge, of course, of what works most effectively on the retail side of the business. So it's a little bit about me. By the way, there was a question that came in here. How'd you get the name TheoTrade? It means theoretical trade logic. So what it basically was is taking things from theory and putting them into practice was the like the name kind of behind TheoTrade. All right, I do some media appearances. This is TD Ameritrade TV. As I said to you, I just did TD Ameritrade TV literally in the last half hour. This is the last time though I was actually in studio in Chicago. So I haven't been to Chicago since 2019, and I got to tell you something. I'm not going back. Even the Chicago Mercantile Exchange, I don't know if you guys heard this, Chicago Mercantile Exchange is thinking about moving out of Chicago. I find that interesting, given the fact that your name is Chicago Mercantile Exchange. Anyway, this is a CNBC appearance. It's myself pitted against Kevin O'Leary. This is the cover of IBD. This is from December. Now, I put a lot of weight into this one because this is about Ultima. This is exactly about, well, what we're going to be discussing today. And when I say it's about Ultima, like, look, the quote on the cover of IBD, and again, this cover of IBD was December 19th of 2022. Investors Business Daily, which was originally William O'Neill, was running around and asking, firms, hey, did you have a good year? Did you have a good year? Because most firms obviously had a horrific year in 2022. And of course, my quote got picked up. This has actually been the best year I've had since, well, the financial crisis. Not exactly the most popular thing, but the question that looms is, how did you do it? Okay, well, that's exactly what we're going to talk about today. How did we do it? Volatility's arrived. It's not going to abate soon. Inflation running red hot. I put that slide in there, okay? Oh, like 2 months ago, I was like, oh, it's running red hot. Still running red hot. You do realize inflation is still increasing. It's not increasing as fast as it was. People are like, oh, inflation's on the run over here. Yeah, don't worry, 4.9% CPI. It's crazy, but inflation is still increasing month over month. Fed pushing rates higher. Maybe they've paused, but they're going to continue to contract the balance sheet. The dollar, say what you will, the dollar's off its highs, but it's still incredibly strong. Geopolitical risks continue to proliferate. Throw a little debt ceiling on there. It's a freaking party. Look, this is what I say: game on. Embrace the chaos. Okay. The only thing I really want you to get out of this beginning portion, we start bridging our way into trading. The only thing I want you to really kind of materialize in your head, number one, embrace the chaos, which basically means, okay, look, markets for the first time in a very long time, they got real. In 2022, they got real. S&Ps were down. By the way, a lot of people are not aware of this, okay? What are the markets doing this year? Okay, seriously, let's pause for a second here. All right, we're opening up another caffeine, more caffeine, Monster. What are the markets doing this year? I want to know from your perspective, what are the markets doing? By the way, these are not rhetorical questions. Jump in here at any point. That, and you give me a chance to actually have a sip of caffeine over here. Okay, it's pretty quiet when I ask that question. Okay, I like that. Up, down, rinse, repeat. That's pretty good. I mean, that's part of it. I'm going to give you something that maybe you're not aware of. Okay, so one of the things that like that. Somebody's like, those monster drinks are not good for you. Okay. I'm at the point of my life of, I need my caffeine, sir. If you take a look at the S&Ps and you go like year to date, they're up 8%. Okay. But if you look at stuff like financials, they're down, right? If you look at like the energy sector, it's down. If you look at the Russell, this is the IWM, the Russell's actually flat on the year. You're going to love this. The Dow, anybody familiar with the Dow? It's flat on the year. For the most part, markets aren't doing anything. Okay, they're just oscillating, but you go, but they're up. No, there's five stocks, okay, that are responsible basically for all the gains inside of the S&P 500. Everything else is effectively either flat or down on the year. But it shocks people when you see, holy crap, he's right. The Dow is unchanged on the year. So people are still, very constructive on the economy. Look, stock picking and Reddit boards are not going to cut it anymore. You got to embrace some of the chaos, embrace some of the volatility. Do not rely on directional bias. Okay. Right now, more than any time in the near, in near term, look, directional bias, we've been in a range doing this. When we break the range, it can explode higher, explode lower. It's not going to make a difference. You got to reduce risk while substantiating monthly returns. But if you're actually right now completely based on directional bias, you're dead. You're dead. I mean, it's just not going to make a difference whether you're right or wrong. You're going to get ripped apart in the marketplace. And people have to understand that is what a volatility actually brings. And that's not going away anytime soon. So we're going to discuss the use of Ultima Trades, what it is, okay, and how to substantiate returns without necessarily being accurate in terms of direction. And we'll discuss that here momentarily, right? And one of the things is, what are Ultima Trades? So higher volatility has resulted in significantly more options premium. What's options premium? You'd be, I don't even know. Look, more risk, more options premium. For those of you that have no idea what an option even is, you're okay for today's presentation. You're going to hear that out of me a couple of times. We are going to discuss options to some extent. No matter what you might think about options, okay? Options are, again, in Ultima Trades are designed to sell options premium while reducing risk. But as I was saying, no matter what you might think about options, we're actually going to teach you to mitigate, which is control risk with the use of options, meanwhile, while selling premium. So rather reduced risk with the premium generation that you're looking for on a month-to-month basis. One of the things we want to stay away from, though, at present time is, okay, trying to kind of handicap what this marketplace is going to do. And again, the longer you're in this business, and I hope you guys will appreciate this, but the longer you're in this business, the more it's okay to say, like, you have no idea what this market's about to do. And I can further that with here. You want to see an interesting chart? For those of you that think that you have a good feel of the marketplace, if you have a great feel for the marketplace, how come the 30-year bond, which is probably the most instrumental thing in the entire screen, is trapped in a range? Okay, and it's trapped in a range now, okay, for, well, from the beginning of 313 to present time. It's 2 full months. It's longer than the S&Ps. These are going to define what the S&Ps look like. It has nothing to do with whatever you think about Apple, or it doesn't make a difference anymore. We're a bond-driven world, and you're just living in it right now. So this is high time to learn to sell options. Learning to sell options. A lot of people kind of hear this through the grapevine, and I'm kind of curious for some like feedback on this. But how many people have heard that? Kind of heard through the grapevine, selling options is a way to make money. Anybody? Okay, how many people have heard that selling options is a way to make money? And I always kind of start off with this because I want to make sure that we're all on the same page. You hear that, and then, and again, everybody actually does hear that, and they're like, oh yeah, and I hear that selling options is a way to make money. But then you go out and you experiment with it, which is exactly what you should do. You experiment with it, and you make money, and all of a sudden, oh, you get hit by a freight train. You're like, what happened? What happened? You learn very quickly that making money on selling premium is viable until you take a big loss. We're going to actually teach you here today is how not to take that hit. How that selling options is a very effective way to make money. It has been a very effective way to make money, but we have to actually mitigate exposure to a large degree. Okay, and we're definitely going to. When I say mitigate risk, one of the most critical things over here. So today's session, we're going to separate myths from real risk and fact from fiction. We're not going to sell anything purely naked over here because you're just not going to survive in this world in doing so. So let's get down to it. Look, if you know nothing about options, do not panic. You can do this. So one of the things that I want to do in today's presentation is I want to hit a lot of different levels in here, meaning that some of what I'm going to discuss is for the absolute novice. Like this first, in a minute here, it's for the absolute novice. Then we're going to work our way into the extremes. So whether you're an absolute newbie to options or whether you've got 20 years of experience behind you, trust me, you're going to learn. Okay, you're going to learn. And even those of you that you're like, I have a pretty good feel for this marketplace, I promise you, we'll change the way you feel about markets quite substantially and show you some very, very eye-opening areas in the marketplace whereby you probably were not aware of. And that's, again, one of the things, if you're going to tune in here for the next hour and a half, I want to hit areas, okay, stuff that you did not know. And a lot of that, okay, it's not going to be anything like, look, options are easy. There's a call and there's a put. Newsflash, People try to make this business so much more difficult than it needs to be. You need to learn this trade in a mambo combo and an iron condor and a calendar spread and a conversion, a reversal and a box and a jelly roll. Okay, like I know all my trades. Okay, I've known all my trades since I'm probably 15 years old. I grew up around market makers. But the truth be told, forget all that crap. It doesn't make a difference. Okay, look. One of the things I got to get to before we actually talk about some of the basics in here is selling premium can now be done in small accounts. One of the things that I want to enunciate time and again, if you sit here today, I'm going to show you some crazy things in a moment, but if you sit here today and say, I only have $2,000, let me tell you right now, you can do this with $2,000 in your account. You'd be amazed at how big the positions you can create with even $2,000 in your account. Okay, $5,000, you can do this in an IRA. So you can do this in retirement accounts. Anything I discuss, I want to be crystal clear about that. Anything I discussed today can be done in an IRA. Anything I discussed today can be done, okay, in an account as small as $2,000. Okay, yes, in a Roth IRA. Look, you want to see my Roth IRA? You got it. Okay, I'll cruise over here and show you every account possible, plausible. Let me go into some of my positions. I apologize. I don't even know which account I'm in. Let's pull them all up. Okay. So we got accounts, people. So we're going to look at stocks, options, futures, everything. So here we have a multitude of different accounts, one of which is even a $5,000 account. I set up a $5,000 account just to make a point to everybody that you can do this in a $5,000 account. All right. For those of you that are new, for starters, look to grasp big concepts. Let's dive right in. A lot of different facets of selling premium. Like, look, as I said a moment ago, people try to make this business so much more difficult than it needs to be. In the end, options, you ready? You have calls, okay? And you have puts, correct? What else can you do? Well, you have calls and you have puts. The last time I looked, you could be a buyer or you could be a seller. And what I mean by that is you can buy puts, you could sell puts, you can buy calls, you can sell calls. What else can you do? Nothing. That's the whole business. You're like, but there's zero DTE and there's long-term and there's short-term and there's volatility in this. Yeah, forget all that crap. Okay. You just got to forget about it. Because right now, first, you got to learn the basics. And even those of you that are experienced, at times, I want you to go back, okay, to the absolute core of what you know or what you think you know about options. Because I'm going to show you some things over here that are not just going to be eye-opening. There's some jaws that are going to drop when I actually show you this in a moment, because people go, what the? I had no idea I could even do that to be able to make a couple of bucks. So there's a lot of different facets, though, of selling premium. You know, there's things called delta neutral trading. People have heard of that, right? There's bull call spreads and bear call spreads and bull put spreads and bear put spreads and credit spreads of all kinds and selling premium. And as I said, selling naked. Oh my, look, there's a million different terms and definitions. Okay, a million different things. All right, involved in this, but bear with me here for a second. There's a million different, aspects over here. Million different aspects in here in terms of like selling premium, but don't get caught up in like the naming of strategies. Like you don't have to learn like the iron condor. You don't have to learn this. You got to learn these days. It's so much easier. Okay. You got to learn these days structure. And that's exactly what we're going to be talking about as I say structure. So by the way, how are members doing year to date? I just threw this in here. This is February. I spent the first 19 years trading without making any profit. But last year I joined TheoTrade and I'm finally profitable. It's the Ultima Strategy. It's what we're going to talk about. Now I'm dipping into intraday trading. Okay. This one comes from James, predominantly following the Ultima. Okay. And now flyby, my account's up 30%. By the way, I just wanted to bring this one up because people were talking about an IRA. This gentleman was actually using an IRA, but he's up 30. And this is actually mid-November. At one point over here. So let's start to actually bridge the way into trading. So your trading is based, okay, on probability. Trading is based on probability. Everything you do is based on probability, okay? Now, let me ask you guys something. And again, this is not rhetorical questions. Jump in here anytime. What do you want your probability to be? What do you want your probability to be? Anybody? Anybody? Okay, and I want, I like the first one that came in here. I knew that was coming up. 100%. Okay, you have 100% right now. You haven't done anything. You're always actually going to have trade-offs in here. What is such an interesting thing to ask people, though, probability. Okay. And the slide is right in front of you, and yet you don't really know what it means. But you and I, we can create trades all day long that have a 90% probability. Okay. But a 90% probability doesn't mean squat. It means nothing. So I get dozens and dozens of emails every day. So TheoTrade right now supports approximately 6,000 active traders. We have about 6,000 people that enter into TheoTrade, either doing education, getting alerts, something along those lines. But it's about 6,000 clientele right now of TheoTrade. Okay. Then there's obviously prospective clientele. Many of you are what I would term a prospective client of TheoTrade here. And in any given day, we get a few dozen emails. Okay. Every single day, though, people come in there and they go, "What's your track record? How often do you write?" And I just want to like shake my head. I'm like, they don't even get the basis of the marketplace. Okay. In this market, right? And in any marketplace, being right does not translate to making money. I want to make that very, very clear. Like everything that you're bombarded with by CNBC and Bloomberg and TV, like everybody's like, you got to be right. What's going up? What stock's going up? Am I bullish? Am I bearish over there? Probability does not make you profitable. Probability is not going to make you profitable. And it's a little bit of a trick question in there when I say 60 to 70%, which is fine, or 70% or higher, 80%, 90%. We're going to do trades here today. We are going to do trades here today that have a 95 to 97% probability of profitability. I want to make that clear. Okay. We are going to do trades, you ready, that have between a 95%, okay, to 97% probability of profitability, POP, okay? If you're unfamiliar with POP, you get familiar with POP. It's all about, okay, what to do when crap does not work. Look, markets are always a trade-off, all right? You could be right 90% of the time, you can still lose money. Right? So where can we find edge? That's what's important. What I want to get to is not that, yay, he's right 90%. Let me show you something really quick. You want to be right 90% of the time? Okay, you realize you can go over here. Let's open up the spiders. Everybody familiar with the spiders? Let's get crazy. You go into the spiders, and I'll just go 65 days out and just make a quick point. Right over here, there's options, theoreticals, and Greeks. Look, this is called probability OTM. It's probability out of the money. So if you look at this, here's a trade right here. Look, I can be right 90% of the time. Right there, it says it. It says it. That is the probability out of the money. The probability this option expires out of the money is 90%. Okay, so it took me what, 30 seconds maybe, including pulling all of this up to show you that you could be right 90% of the time. Did you need a chart for that? No, you did not. That's not going to give you an edge. That's what we need to talk about. Okay, that's what we're here to actually explore, is how do you get edge? So we're going to discover probability and premium selling tactics. The first thing that I'm going to do, and I'm going to explain this to you in quite some depth. The first thing I'm going to do, though, I want to explain to you how we actually look at markets and what we're actually going to sell. So in the first example, we're going to go out here, right? We're going to talk about buying a 120 call. Okay, so let's put that down here. Let's buy a 120 call and let's pay $1 for it. And this one's good for 3 months. All right, we're going to buy a 120 call, buying a 120 call. What is a 120 call? Look, time out. There's people here that have never been involved in this business before, ever. Okay, never, ever, ever, ever. And if you've never been involved in the business before, talking about like, call and a put is foreign to you. So let's talk about a call. The stock right now is trading at 100. You bought a 120 call. Where do you need the stock to go? Okay, I'm going to tell you where you need to go. Up. How far up? Like if you buy a 120 call, you're taking basically an outside bet and saying like, I think that stock is going to go above 120. That's huge. Like you need it up, 20%. And you're not even breaking even at that point. You needed to what? Well, you're buying a 120 call. Now, if you buy a 120 call, buying a 120 call, it gives you right to buy the stock at 120. Do you really want to buy the stock? No. So why are you buying a 120 call? Just in case the stock does go up. This is a trade though, okay, that is a wing and a prayer. And you don't need it just up to 120. You need it up to 120 plus the dollar you paid for it. Okay. Look, the inevitability of the trade. All right, what's going to happen more often than not? The only reason I'm showing you the buy side of this, what's going to happen, okay, a lot of the time. So you buy this 120 call, you pay $1 for it. First of all, what's the most you can lose? You can't lose more than $1. Most of the time, stock can stay flat. If the stock stays flat, you lose $1. If the stock goes anywhere down, you lose $1. Even if the stock goes up to 119, if the stock goes to 120, you still lose $1. Okay, you're not a winner chicken dinner. It's not this has got an incredibly low probability of success. But time out, is the trade wrong? Not necessarily. Not necessarily. Like if you think you know something about the stock, and if that stock soared to 130, right? So let's say that the stock soared to the 130 level, stock goes from 100 to 130. What's your 120 call going to be worth? Again, for those of you that have no idea what a call option is, all right, call option gives the right to buy the stock at 120. Do you have to buy the stock at 120? No. But if you have the right to buy the stock at 120 and everybody else in the world has to pay 130 for it, that is going to be worth at least $10. It's going to be worth at least $10, right? Now, I know you paid $1 for it, but that's neither here nor there. If you have the right to buy the stock at 120, the rest of the world has to pay 130, you're going to make at least $10. That is a 30% move up. That's like, again, it's a wing and a prayer. Now, time out. Let's look at the opposing side of that. Now, I know I ripped through that quickly, and that's okay, because we're going to do this like a bunch of different times. I want you to remember something. We're going to go 3 months out in time. Does that bother you? I try to make it bother you. I like it. Okay, here's the stock. Do I own the stock? Let me ask you something. Do I own the stock? No. Do I want to own the stock? No. Why? Because markets are crazy. They're just crazy right now. Like, I know that the market's up today. Oh, it's up today, but don't worry, it was down yesterday. All right, we're range bound. I'm trapped like a rat in a cage right now. We're going to go out and we're going to sell a 120 call. And we're going to sell it for exactly $1. I'm going to put it down here. So I'm going to sell the 120 call. I'm going to collect a $1 credit. Now, time out. That's it. Now, that's actually what we term selling naked. I'm selling naked. We're not going to go out and sell naked. We're not actually going to go out and sell naked. Okay. But we want to make sure strategically you understand what the hell's going on here before I go on, right? I got to make you sure that you understand what the 120 call is before we go on. Again, I want to reiterate something. I'm not just going to go out and sell it naked. We are going to look at risk reduction and so forth, but I need you to understand conceptually why I'm doing what I'm doing. Because this is the stuff that I know there's some like people that have experience in here and you're like, I know where he's going with this. No, you don't. Not unless you've actually seen this presentation before. Okay. Trust me when I say you have no idea where we're going with this, because I want to show you right now, okay, literally where edge lies in a marketplace. People ask that all the time, like, well, how do you know that this is going to work? I'm going to show you how I know that this is going to work and why other crap that people do is ridiculous. Like nobody seems to look at the mathematics behind this, right? I mean, look, you can sit here and figure out mathematically, can I make money? Not if I do this one time, but if I do this thousands of times. Let me tell you something. This strategy, we have done thousands and thousands of occurrences, not in paper trading, not in back testing, none of that crap. We've traded it and we have all of the evidence that we need. We show you everything and every trade that we do, okay? So I'm going to sell a 120 call. I'm going to sell it for $1. And that's it. That's the trade. Don't worry about hedging right now. I just want you to understand the sale of a 120 call. Now, when you sell a 120 call, it obligates you to give somebody stock at 120. Do I own stock? I do not own stock. I am actually, in this example, just for this example, I'm selling it and selling it naked. People go, I don't have the margin for that. Push that aside. No margin talk. No margin talk, because margin is no longer an issue. Very few people understand they also changed the rules in terms of margin. So I will show you expressly today how to circumnavigate margin. Anybody here hate day trading margin rule? Huh? Anybody? Put the hand in there. Anybody hate the day trading margin rule? Okay, because you can get rid of it. All right, I like that. Somebody came in, what is margin? Okay, it's when they call you and say, give me more money. Anyway, the when we look at this, we're going to sell the 120 call and we're going to sell it naked. What can happen to you from a probability point of view? Look, the market stays flat, you keep your buck. The market goes down, you keep your buck. Even if the market goes up, it's very likely you keep your buck. What happens? You sit there for 3 months and go, I collected $1. I promise you, okay, you're not going to have to sit here for 3 months and just collect $1. But I want you to understand, strategically speaking, what I'm doing. Like this marketplace can go up, this marketplace can go down. It's gonna do a little dance. It's gonna make a little love. It's gonna get down tonight. Okay, but in the end, it is an extraordinarily, and again, this is the point. It's extraordinarily far out of the money. This trade has like a 90% plus probability associated with it. That doesn't necessarily make it though a good trade, right? So let's actually discuss a little further. So you saw in my example that I sold 3 months out, and it drives people crazy. Typically, traders sell short dated options because I know a lot of people today that talk about what we term 0 DTE, right? 0 days to expiration. Look, these daily and weekly options, okay? Who do you think actually came up with this crap? It was actually the founders of Think or Swim. I was in the original meeting, okay? There's no one on the planet that knows more about like, short duration options than any of the people that were originally at Think or Swim. And a lot of them are in the TheoTrade crew. I'm going to tell you right now, okay? The edge is against you in the shorter duration. We're actually going to use longer duration. Why are we going to use longer duration? Because everything that you know right here, this is what we call the decay graph. What if this decay graph was completely inaccurate for the type of options that we're going to trade? Do you believe that? Okay, because right now you're about to learn what Ultima really is, right? When we say the term Ultima, and again, that's a phrase that like, look, Ultima alert. Like, what does that really mean? Like, what does that imply? Let's go back to the original example, but now we're going to do it in a live market environment. Okay, so we're going to learn exactly what, when I say Ultima, okay, Ultima has to do with volatility. It's the volatility of the volatility of the volatility. It's like a tertiary volatility Greek. It's not ultimate. It's, look, Ultima is how actually we can make money in this marketplace right now with very, 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 very limited amounts of risk. So what we want to do in this particular time frame is we're going to go really far out. In fact, I was talking about 3 months out. Let me drive you guys crazy for a second. Is it okay? Just hear me out for a second. Is it okay if I use an option 121 days out in time? Is it okay if I do that? Right? Let me ask you something even further. Does it matter? If I can make money, right? Does it matter? Are you going to have to wait? Here's the big question that comes up. Am I going to have to wait 121 days before I actually go cha-ching, cha-ching and make money? The answer is no, you're not going to have to wait. What if I can make money every, for instance, 30 days, okay, but I'm going to use the further out option. Why am I going to use the option that's further out in time? Less risk, okay? It's going to be less risk. I'm going to go 121 days out, and I'm actually going to take an example that I was just doing a moment ago. Let's switch this over here, okay, to delta, 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 okay? We're going to use an example. Look, we're going to find an option trading right around $1. This is perfect, perfect. Here's an options trading right around $1. It's the market's 99 at $1. Now I'm going to go out, okay? Suppose we sold this. We're going to go out and we're going to sell, all right? It's a 15 of September, the 460 calls. We're going to sell those for exactly $1. Okay, good. If I went out and sold them right now for $1, would it make a little bit more sense? Okay, by the way, don't worry about margin. Let's see if I can sell this for $1. $1, $1, $1. Oh, the market right now is $1 to $1.01. So let's try to sell them for $1.01. Hit confirm and send. He sends the trade. Okay, so the market has to rally up. Look, I am the offer right now. If you want to see my market, okay, let's go look. I am the offer. There I am. Captain One Lot rides again. I'm actually sitting on the NASDAQ. Look, see the one lot offered? Okay, they have to trade. I'm going to fill. I'm next in line to be filled because you can see me bouncing around over here. But I am one lot offered on the NASDAQ. NASDAQ obviously has an options exchange. I'm next in line to be filled. The spiders have to move up about 5 cents for me to fill. So here we go. If they hit 355, I'm filled. Okay, here we go. Oh, we're so close. All right, I don't want to wait here forever, but if they hit 355, we'll fill on that particular trade. So with that, it's like I made markets for a few years. Okay, so I'm selling the 460s. Then what do? Nothing. Just like I did over here. Everybody's doing something. Me, I'm doing nothing. I'm going to go out and I'm going to sell the 460s. And then I'm going to do this. Okay, time. Let's just wait about a month. How could I value these 460 calls exactly 1 month from now? Well, what I could do is this. If I looked at the 460 calls, which I just sold for $1, but if I looked at these 460 calls, okay, and I looked at them exactly a month from now, what's a month from now? Well, assuming all things being equal, okay, what would the 460 calls be worth 1 month from now? And how could we figure that out? All right. And the answer to that lies in the ability just to look at the 93-day options. And a lot of people don't get this, but there you go. I'm filled for $1.01. Okay. Did you see what the market hit? As soon as it crusted right over what we said, right? There it is. So we knew exactly where we were going to fill. We knew what fill price we were going to get, and we filled on the offer. So if I want to know what this option is worth about a month from now, I can look at the same option a month from now. What I'm saying is it's a 460 call. We're going to look at a 460 call with 121 days. With 121 days, the 460 call is worth $1. What, pray tell, is the 460 call going to be worth when there's only 93 days left? Okay. By the way, how many days are in between 121 and 93? Anybody? How many days are in between this? Okay. It's exactly what? 28 days. So let's open this up. Let's assume, okay, that we fast forward. And again, I'm assuming all factors presently being held equal, because what I'm told is options, they don't really decay the way you think they're going to decay and so forth. And okay, what I want to point out, and again, okay, we just opened, let's make sure that we see this. We just opened this position. I only did a one lot. You can see it's gone against me. There's a 460s. So I'm going to close that up and I'll come out here to the 93-day expiration. We're going to look exactly at the 460s. I happen to have another position in here, but we're going to look at these 460s. Okay. And 28 days from now, we're going to buy them back. Right. We're going to buy the 15th of September, 460 calls. We can buy them back for 45 cents. What do I actually make? Anywhere between 55 and 60%. Okay, so you're making 55% for what? For 28 days. If it's 30 days, I'm going to make about 60%. You're going to make between 55, okay, and 60% for doing what? Absolutely nothing in the next 28 days. Absolutely nothing. You're like, wait a second, how is the option doing that? That option was trading at $1. I thought decay rate was supposed to be slow. That option had 121 days left to expiration. From 121 days, okay, to 93 days, the option lost, whoops, over 55% or greater of its value. Everything that you know about decay is completely wrong. Ultima has changed everything. Okay, it's the volatility, the volatility, the volatility. What you're looking at is a flux inside of a volatility skew. All right, then volatility is actually shifting beneath your feet as we're moving forward in time. And we were able to actually find the sweet spot of just that happening. And that sweet spot is further out in time. See, a lot of people, they'll go out right now and they'll sell options with very, very short amounts of time. Not only is there no edge in short duration, what happens in the short duration is there's a deficiency against you, that you're actually putting yourself at risk. We're going 121 days out, okay? And you think about this, I'm all the way at the 460 level. I'm like crazy nosebleed seats out of the money. The market here is trading 414, is a 460, right? For the market to get to 460, just bear with me for a second on this. I have to open up, first of all, I have to open up like a 3-year chart, okay? Can the market get to 360? Absolutely. Or sorry, 460. Absolutely can get there. But you do realize that at that point, we're actually facing almost all-time highs in the marketplace. It's crazy, right? And again, this is not all we're doing. I'm just showing you one, okay, very minor instance, all right, of how this works. Okay, is exactly how this works. Because you know what the crazy part is too? If the market goes up, volatility crushes. So everybody's worried about directional bias. You shouldn't be. But don't worry about if the market goes up. Don't worry about if the market goes down. You're going to be just fine. We're not going to do this just on a call. Okay, stop trying to put the strategy into your head. We're not talking about strategy yet. All I want you to get from this, all I want to get from this, okay, is one very, very simple idea. Okay, that inside of 28 days, you can make between 55 and 60%. The basis behind that is selling an option, okay, that's way out here in the nosebleed seats, just like this 120. And you go, well, what else can you do that in? I can do it in any number of underlines here, okay? But I like to stick, let's start with the index products. Let's go to the QQQ. The NASDAQ has been straight up this year. Still works in the NASDAQ. Okay, let's go 121 days out and just make a quick point. 121 days out. Okay, I'm going to go way out here to what I call the nosebleed seats. And by the way, I am trying to just find an option trading at $1. Here we go. Here's the 380s. Just watch this for a second. Here's the 380 calls. And the 380 calls are trading for basically $1, right? I can collect $1. Now that's out in the SEP. What are those 380 calls worth 28 days from now? Again, assuming that the marketplace holds constant, the 380 calls, you can see I've got more positions in here, but those 380s, okay, look, they're worth basically 40 cents. So to be worth 40 cents, I could buy them back for 40 cents. I'd be up over 60%, greater than 60% in less than 28 days. So how come you're not doing that? Because come on, I always heard that, you know, look, why sell options so far out in time? This is what we do. Okay, we go out there and we actually find edge in places that maybe people aren't necessarily looking for. Maybe people don't realize because you want to, you know, follow some Reddit board where they're talking about 0 DTE. And I'm telling you right now, 0 DTE will be the end of you. Okay, it's absolutely the end of you. You've got to understand though, it's going to go a little deeper than this. It's not just going out there and selling a call. Okay, but I want to start that. Questions, comments, anything, because I want to make sure that everybody gets that you can make between 50 and 60%. Okay, so if you were to do this, and I'm always looking for like a good example, but here, I was using this a couple of weeks ago. This is a tape dispenser. Yes, I keep large rolls of tape and duct tape constantly in my office. I don't know, it seems to be like the tool to fix everything, right? This is a roll of tape, okay? I want you to imagine that every time I went out and I sold, okay, this roll of tape, I could sell this for $1. Let's just say it's $1. Inflation is probably like more like $10, but let's say I sell this for $1, but I can turn around and I can always buy them back for 50 cents. Then what is the key, okay, to being profitable with the roll of tape, right? Like what's the key? The key point over here. You do as many rolls of tape as you humanly can, right? It's one thing that people miss about this business, okay, is that once we learn to sell premium and we sell the right options, okay, when I say sell the right options, like I was selling stuff way out here, we're going to sell stuff way out here too. And I'm going to sell more stuff and more stuff and more stuff and more stuff, okay, because I'll tell you exactly what I'm going to do. I'm going to build an inventory. I'm going to build an inventory because what people do with trading is absolutely ridiculous. What do they do with trading? I put on a trade, I take off a trade, and I put on a trade, and I take off a trade, and some work and some don't. Okay. What if you were to put on a bunch of trades that all work together? An inventory. Okay. How do you think market making firms make money? How do you think that any trader makes money? Inventory. Okay. So what are you doing? Okay. You're screwing around like I got a little bullish in Apple, got a little bearish in Boeing, got a little bullish in gold, got a little bearish over here. Okay. What if we just went out into the S&P 500 and built inventory? And every time that we went out and did that inventory, okay, we can make approximately 50% on our inventory for holding inventory for about 28 to 30 days. Does that sound reasonable to you? Okay, I want you to think about the business though in a vastly different way. I don't want you to think about like my MACDs and my Fibonacci's and my Bollinger Bands, okay? The only key that you got to think about is how do I get as much inventory on as possible with using as little capital as possible? Because that's what's going to be key. Now, what happens to a lot of traders when they get into this, a lot of you guys have learned to sell premium, right? Again, how many people have sold premium? Huge amount of you in here. Anybody here never sold premium? Okay, you can say me, 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 me. It's okay. But if you've sold premium, I'll tell you exactly what happens. If you sold premium, you make money, make money, make money, make money, make money, bam, get hit by a huge Mack truck. And it happens to everybody. They do trades that have a 90% probability, but then they find out that there's what we call the 10% hammer. And they don't know what that is, but 90% sounds great. But then 10% of the time, the market rips your face off. What basically the market does to you, you make a little bit of money on like an iron condor. By the way, it's always somebody that sells an iron condor. For those of you that have no idea what an iron condor is, okay, you sell a call, you sell a put. You buy a call, you buy a put, and then you just pray that we stay somewhere in the middle. So the first trade you do, you make money. The second trade you do, you make money. The third trade you do, you make money. The fourth trade you do, you make money. But then you like increase your size. You'll like, with the monkey thing and like a rooster squawking the feathers over there. You're making money and you increase your contract size, and the market just goes and hits you like a Mack truck. It's awesome. You're like, did you get the license plate of that train? And the losses exceed the gains of the previous trades. It takes 50% of your account away. And if you're listening to this right now, you're like, holy crap, it's like you could see my account. I could for 15 years. I know the plight of the iron condor trader. Okay, 15 years. I looked at people's accounts. I know exactly what happens. And you paid $500 to take this class about, learning how to do an iron condor. It's ridiculous. And then you go, I can fix it. Now that's the really degenerate, trading right there. You're like, it went bad, but I know I can make it better. Okay, I was bad, but now I'm feeling better. Fix is a really dirty word. I'm so cynical about this because I've seen people like try to fix a trade. They go, it's not really fixing a trade, because you learn that the term fix is a very naughty one. You go, it's morphing the trade. I'm morphing the trade. I'm making it an amalgamation of what? Crap. Anytime you try to fix trades, if you fix a trade, no matter what, listen to this carefully. Any fix can work. But the very notion of fixing throws more good capital after bad. Everybody's aware of that, right? You cannot fix a trade without doing something, which is more risk, more capital, more transaction costs. But transaction costs are almost free. That's great. Okay, that's great. Again, it's like you become like a degenerate in the marketplace trying to fix stuff, because it's not fixing, it's morphing. Look, bad trades, throw them out like yesterday's trash. If you drove a car off of a cliff and brought it to a body shop, they'd be like, that's a nice piece of crap. What do you want me to do with that? I'm going to say the same thing about your trades. We're going to learn to sell premium. We're going to learn to do it properly. We're actually going to learn a little bit about inventory management. Inventory management first and foremost. Okay, where's the SPY trading at right now? What is it, like 114, 115? Okay, so markets are actually popped up a little bit. So here is the SPY, and the SPY is trading, let's say, right at 415. So we're going to go out and we're going to sell. Just bear with me. We're going to sell a 460 call, and we're going to collect exactly $1 on it, right? Everybody comfortable with that? Before you know it, we're also going to sell the other side. What's the other side? The dark side of the force. We're going to sell, let's say let's make it the 340 puts. Oh yeah, puts are going to be trading for double. So the 340 puts are going to be trading for $2. And before you know it, you're going to sell a 330 put. The market backs off a little bit, collect another $2. And before you know it, you're going to be selling, I don't know, let's say a 310 put. Like we sell off big, collect another $2. And before you know it here, you may actually be able to sell the 470 call, collect $1. Might even be selling 480 call, collect another $1. What is this? That's my inventory, people. Now just stop right there for a second. There's 6 trades on the screen right now. All 6 trades are incredibly high probability, incredibly high probability. In fact, okay, without deleting these, just bear with me for a second. We're going to take you into the live market and show you, okay, the degree of accuracy of these trades. Okay, when I say degree of accuracy, look, I'm selling like a 340, right? Selling 340. So let's go look at the 340s. What are the 340s trading for? Okay. Oh, apologize, I'm on the Qs. Let's go to the spiders. Let's go to the spiders where it'd make a lot more sense. I was thinking spiders. So spiders are trading just shy of 415. Let's look at those 340s. You ready? Where are the 340s trading for? Oh, I'll be damned. They're already 270. Okay. Then you look at the 330s. They're 225. Okay, then you look at the 310s, they're trading $1.58, but if you averaged all of them together, they're right around $2. You look at the calls out here, they're dead accurate. Point that I'm trying to make over here, people, that's my inventory. Okay, that's my inventory. And my inventory right now, let's say it's just all in one expiration. Do you have capital to do this? Don't worry about that. I'm actually going to show you in a moment how to circumnavigate some of the margin restrictions, because a lot of people, they almost tune out on me because they're like, what about margin? What about margin? Forget about margin. I'll take care of the margin. I'll show you how to take care of the margin. All right. 15 years in the brokerage world. Okay. I truly do enjoy, okay, getting around the ridiculous rules of day trading margin restriction. Okay, it is a ridiculous rule, and like anytime I can actually, go against like FINRA and show you like ways around that, I'm going to do just that. Okay, look, what's the problem with this picture? What's going to happen to you sooner or later? What's going to happen to you sooner or later in this position? I'm going to tell you exactly what's going to happen to you. Catastrophic move in the marketplace. You're going to have a catastrophic move in the marketplace. And what are you going to be left? Like this market's going to go from 415, it's going to get slammed in 2 weeks down to 330. You're going to puke your guts out. There's just no way you're going to be able to hold your positions. People, if you sell option premium naked, you're a ticking time bomb. No one can survive. No one can survive selling premium naked. All right. And I say that, okay, with all due respect, after 15 years, I sat on the risk committee for both Thinkorswim and TD Ameritrade. And all we did on the risk committee is we saw the crappiest positions ever on the entire retail and institutional world. By the way, part of my resume I did not share with you. I spent 18 months and built the education division of TD Ameritrade Institutional. So not only I've worked with retail clients, but on the institutional side, okay, the bar to get education from me was $300 million or more under management. Most had over $1 billion under management. So we used to talk about like risk mitigation, selling premium and $1 billion plus portfolios. And I'm telling you, okay, no one can survive selling premium naked. So what we do, okay, what we do in here is we go in here and we say enter, all right? The hedges. What are hedges? They're risk reduction. There's hedges. One of them would be called like a risk twist spread. Number 2 over here, this is the one I'm going to show you in a moment. This is a VIX vol spread, okay? Number 3 over here would be like a gamma iron, okay? I want to explain exactly what this is. You're in business, okay? And the business that you're in is selling tape dispensers. It doesn't matter whether it's buy options. It doesn't matter, okay? You're in the tape dispenser business. And the tapes dispenser business, every time you go out and sell one of these, you basically collect $2, okay? But you get to go out, you can go out and on Alibaba and buy them for $1. So every time you trade one of these rolls of tape, you're going to make about 50%, okay? Then what's the name of the game? The name of the game is going to be what? Volume, right? It's going to be volume. And I just cannot stress this enough because people think that they understand, the business and, well, you got to do this and you got to do that. Look, it doesn't make a difference. Just do volume, okay? But when you do volume and you start to build a business around tape dispensers, okay, how are you going to do more tape dispensers? You're probably going to have to hire a couple of individuals. There's going to be a packing crew. You're going to have insurance, setting up 401ks for these people. It's ridiculous. I'm not asking you to do any of that. In this business, I am asking you to do what? Okay, to hedge. Hedge is going to be a sacrificial lamb. If you do not use some type of a risk reduction, okay, methodology, you're already dead. Right here, see right here, somewhere in here, we're going to lay a very, very small trade. We're going to call this trade a VIX vol, okay, spread. What is a VIX vol spread? For those of you that know what the VIX is, forget about a mild move to the downside. Let's say things get crazy, okay? If the market gets crazy and the market really comes down hard, what's the VIX going to do? It's going to go ba-boom. It's going to explode higher. How about if this marketplace came screaming lower? Let's change the color over here. Make sure you guys understand this. The market comes screaming lower. And if it comes screaming lower, what does the VIX do? The VIX is actually going to do what? Boom, this goes off. The VIX vol spread is a very minute hedge that explodes in value. Imagine that we paid almost nothing for the VIX vol spread, nothing. I'll show you my account statement here in a second, but I paid nothing for it. And the VIX vol spread explodes in value, okay? And if it explodes in value, what it does is it opens up a parachute, okay? And actually would allow me to either exit and or sustain these trades for a significant period of time. VIX volatility spread, okay, is a little bit of your savior in a marketplace that's uncertain. You go, when do you put the VIX volatilities? But you always have a hedge on. There's a multitude of hedge. We could do a risk twist. We could do a VIX vol spread, a gamma iron. We have what's called an inflection point spread. If you're not using a way to reduce risk, you're dead. To the upside, we use a trade called the gamma iron. If the marketplace explodes higher, you got to pass through the gamma iron before you're going to lose money. People, this is inventory management. The hedges, they're a necessity. And you look at all of this, you think like, oh, this could be a little bit complicated. One of the biggest differentiating factors of what we do now here at TheoTrade, some of you are actually familiar with TheoTrade, one of the biggest differentiating factors. In the last several months, okay, we stopped just talking about education for this. For the last now 2 years, we've been texting out trades and trade alerts. Now, okay, we've made trade alerts one of the preeminent areas of the business. We realize that markets right now, they're volatile, they're unforgiving, okay, and they can break people. And in light of that, we show you what hedge to do. We show you how to actually build the inventory, all of the above. The name of the game now, it's not to teach you every nuance of this. It's for you to know enough to be able to follow us, okay, right, in our trade alerts into specific trades. Look, this is what you want to do in this business, right? And I'll show you all the returns in the portfolio and how it's actually done, okay, all the little nuances. But this, people, this is what you want to do. Does that make sense to everybody? Okay, now, this is why you want to sell premium. You can do this in a small account. I'm going to show you that in a moment. Okay, produces positive theta decay, may enhance existing positions, meaning that, you know, you can just sell premium against stuff that you already have on. It's an incredibly high probability of success. You're never going to buy or sell the stock. You don't use stop orders. And look, you could be completely wrong on market direction and still produce profitable trades. You did realize, like on this, you know, aforementioned example, so what if we rally? If we rally, all these puts make money. So what if we sell off? If we sell off, all the calls make money. I mean, right now we're just oscillating back and forth. Could there be a better market for it? No. I mean, honestly, I wish there was a little bit more movement, but who cares? Now, how many people here want to learn to do this with nominal amounts of capital? Somebody want to learn that? Okay. There's a product that was recently, okay? And when I say recently, only in the last few years, they came out with a product, okay? Who came out with the product? Chicago Mercantile Exchange, okay? And the product is actually called the micro. So it's under symbol /MES. Well, they have micro options and futures. You know what an MES is? It's half the size of a spider. And you go, what does that mean? Well, if you do this in the spiders would tie up hundreds of thousands of dollars of capital. But if you do it in the MES, it'll tie up $700, $700, that's it. Then tie up $700. You can go out there and sell like puts in the MES, ties up $700. Then use like a VIX vol spread to hedge it off. It's ridiculous. It's almost comical because the spiders will tie up hundreds of thousands of dollars. The MES is a new product. Okay, by the way, the MES, there is no day trading margin rule in the micro because it does not belong. Okay, by the way, look, you can see I've got positions in the ES, the MES. I say like, look, the proof's in the pudding. You can see trades are up, what, 33%, 30%. Okay, 27%, 23%. This is a hedge in here, so I'll close that one up. That's one of my hedges. But every one of these trades, every single trade I have on right now is profitable. And I'm working another order to close over here. Okay, every order I've got on and every order I've got working right now is profitable in light of whatever you might think. Okay, I cannot stress to you enough. And when you say I can't do this with a small account, here's a small account. I have 3 contracts sold. This is a $5,000 account. 3 contracts, the MES, okay? And I could sell another 3 contracts. You want to see something crazy? I could come in here and I could sell another 3 contracts and not tie up any more capital. The buying power effect would actually be an $18 credit to sell 3 more contracts in here. In fact, it's going to be more than that. I do apologize. I didn't put 3 in here, okay? Let's go in there and put 3 more contracts. The buying power, okay, is actually going to what? Oh, nominal buying power. 3 contracts is actually a fairly significant trade, right? People have respect for what you actually can do in this marketplace, right? I'm telling you, you need this in your life. Selling premium can bring in consistent returns while minimizing your risk, okay? Now, we're going to talk about criteria and how to do this the right way. But before I do that, I'm going to take you into live trading examples. When I say live trading examples, okay, what I'm going to show you are trades, okay, that we've done in a portfolio. Every trade that I'm showing you has been texted out, okay? What I'm actually referencing in this particular case, see if I can actually bring it up over here. This is a portfolio here on TheoTrade, okay? Every opening trade is in here. All right, these are all the opening trades. You can see close, 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 close. Okay, and here's all the closing positions. So to open, to open, to open, to close, to close, to close. You can see every trade that we've done, and you can actually opt in on our site. You can opt in to different portfolios. Look, you can get this texted out to you so that you opt in to an Ultima Theta portfolio. You go, why would I want to opt into this one? Okay, I don't know. Maybe you want to actually see us do the trades. And when you see us do the trades in real time, we're showing you variations of all of the trades I'm about to show you can be done with as little as $2,000 in a funded brokerage account. It can be done inside of retirement accounts. Now, all I'm showing you here, okay, and I'm going to rip through this very quickly. These, okay, are the alerts. These are trades from 2021 until present time. So I wanted to give you, all right, first, I'm actually going to take you through about 18 months of results. Okay, so from the beginning of 2021, okay, I'm going to take you forward about 18 months. That takes you about halfway through 2022. Then I'm just going to show you, the portfolio kind of continues. This portfolio, right, is the one that's texted out. It's exactly this portfolio. It's the Ultima portfolio. These are the trades that are actually texted to the masses here at TheoTrade. It's one of the reasons we have, some 6,000 people on here. But this has become kind of the preeminent side of what we're doing now at TheoTrade. We recognize volatility. Look at the S&Ps has moved 50 points, okay, in the last few minutes of trade. It's crazy out there. So this is all the way back to 2021. If you look at this, it shows, to open, to close, the return, the exact strikes I traded, everything, the opening price, the closing price, the fact that it's Tesla. I just did Tesla as the first example. But if you look at this, you go, where does this come from? Okay, show you exactly where it comes from. It's right here on Thinkorswim. So anybody here use Thinkorswim? Okay, does anybody here use Thinkorswim? Maybe. So I'll just give you an example. Like if I looked at like SPY, I trade some SPY, but if I looked at SPY over the last, for instance, 360 days, there's a lot of tools on Thinkorswim. So my group built a lot of the stuff on Thinkorswim. This is what we did. So we built the education division of Thinkorswim, but we also built a lot of the tools. One of the gentlemen that actually works here is Jeff Bierman. He actually built a huge amount of the studies on Thinkorswim charts. Here's every trade that I've done over the last 360 days. I've got 90 fills in 360 days. Now you can see to open, to open, to open, to close, to close, to close, to open, to open, to open, to close. All I'm doing is just copying and pasting those into here. So let's go through and see what has the portfolio done. Showing you everything in here, 58% return. This is a bond short put. The reason I'm taking you through this is, again, obviously to show you a track record, but almost everything that we do, okay, the closing criteria, get out with about a 50% return. Like opening date, closing date, 57%, 53%. I know some of you have no idea what a bond short put is. That's okay. That's what we are here for, right? These are not credit spreads. These are not credit spreads, okay? They are single options that are hedged, okay, by products like VIX. In fact, let me take that a step further. A moment ago, I talked about VIX and I said, look, I did a hedge in VIX. Want to see my VIX trades? Look, here's the hedge. See the hedge? 6 cent credit, 5 cent credit, 5 cent credit, 5 cent credit. These are my hedges. We show everything on here. When I say hedge, this is the trade that'll explode in value and reduce my risk if by chance the marketplace crashes, because you can't function without hedges. Anybody that goes out there and just sells premium and sells premium naked, they're going to blow themselves up. You use hedges. Bond short put, IWM short call, IWM short call. Tesla, 76%, 60% return, 60 or 50% return, 51% return, 57% return, 49%, 50%, 62%, 53%. Now, once you actually get your feet underneath you, and I'm just continuing to scroll, once you kind of get your feet underneath you, you know what you're doing here, okay? We can actually look, there's a 19% loss. It happens, okay? 54% return. Every trade that we're doing has between a 95 and 97% probability of profitability. As I was saying, once you get your feet underneath you, we will actually change what products you trade. Why? Better use of capital. So once you actually get more comfortable with markets, you'll just see this is the track record here. This is every trade that we've done, okay, in this portfolio. Now you're going to see me actually change up, and I'll switch and I'll start trading ES. Okay, when I say ES, okay, the ES short put, this is a much better use of my capital. Okay. By the way, yes, we have brokers that we work with in Canada to help implement this strategy. In fact, one of the primary brokers, these guys, Tasty Trade, ooh, they're coming to Canada in the beginning of 2024. It's going to change the whole landscape of Canadian brokerage firms. So the ES short put, this is 5 times the size of a SPY contract. And you'll see me then, okay, understand that this is a much bigger trade. Now you're getting a 50% return in a gigantic trade. Like every one of these is worth 5 of like spiders, right? After you understand a little bit more about it, then we amp you up, okay, into more complex trades. Stuff like what we term Christmas trees. Christmas tree, it's like the mother of all trades, a very, very powerful strategy, okay? Again, taking you through a portfolio. Not every return, by the way, is going to be perfect. There's a 19%, okay? It happens. Most stuff that you're going to see is about a 50% return, okay? Another Christmas tree, and I'm still in 2021. We're going to jump forward here in a second. We're going to actually bridge our way now into 2022, okay? Another Christmas tree spread. Look at this. 1 unit. Every 1 unit you did is worth $4,000, okay? Now, as I kind of go through here and I'm cruising through with 50% and 57% returns, okay? All of a sudden you see another Christmas tree trade, another bond short put, and then I just kind of end the portfolio in here. I want you to understand that this portfolio doesn't just end. It picks up right here, okay? Every trade, instead of copying and pasting every single trade, okay, you can actually go through all of 2023. Here, I'm all the way back into 2022. This is December of 2022. We can actually go to the next page. Okay, I just want you to see every single trade is in here. People, there doesn't have to be a million different trades. You don't need a million different trades. We're all the way on the 3rd page here. Okay, these are all open and closed trades. Okay, the reason I'm showing you this is, again, to give you a feel like, you know, you don't have to sit there all day waiting for text messages. Like you can see some activity here in, I don't know, June of 2022. There's 1, 2, 3, 4, 5, only 5 opening trades, okay, in the entire month over there. All right, looking down over here, oh, there's a lot more in May. May was pretty rocking time over there. But again, it's completely no holds barred. You get to see everything we do. And that's one of the critical aspects. Look, if you don't have a lot of time to do this, it's not a huge problem. Everything that we do and everything I just showed you, okay, is displayed live at TheoTrade, okay? This is hands off. It uses set and forget order types, okay? Even a fraction of your time is good enough to see results because you can actually use GTC orders to get out. We now provide real-time trade alerts. It's one of the biggest and differentiating factors of what we've changed here at TheoTrade is you get real-time alerts. I mean, what better time, okay? The aspect I want to cover is, you know, maybe people have time to learn a new skill set, maybe they don't. Learning though, in the midst of this type of volatility, you know, if the last 7 weeks, the market's just been channeling back and forth, right? Okay. Except the irony is that makes it the most dangerous time because you know when we break range that we're going to explode higher or crash lower. Look, okay. Learning this, it's a skill set. It's going to take some time. While you're ramping up, okay, you can just go out there and follow our real-time alerts. You know, I've kind of come full circle on this. I want people to learn to go out and to fish for themselves, okay? But here's the reality. Since the volatility picked up in 2022, okay, that learning curve can be costly. That learning curve, you don't have the time okay, and the downtime necessarily to go through the learning curve. Follow the trades we're sending, okay? Selling premium is a phenomenal hedge for recessionary times. I don't care whether you're long, $5 million at the stock, or whether you never traded a stock in your life. It's not going to make a difference, okay? In volatile times, you turn to selling premium. Okay. This has worked phenomenally in 2021. It's worked phenomenally in 2022, and it's working phenomenally right now. I mean, right now we're trapped inside of a range. So you can imagine that we've sold a bunch of premium, and we have. We're kind of stalled out and allocating very, very lightly, but everything that we're doing right now is working. Look, markets could be in bouts of volatility for years to come. And you need to recognize that. It's one of the reasons we switched the business, okay, substantially to provide you real-time alerts. Okay, this comes from Brian. Says, wow, I want to thank you again. You've taught me in the last 2.5 years. Okay, risk twist spreads, duration positions. Missed out the last market move. My IRA, though, was up 14.8%. Okay, that's not bad considering, again, what we've actually seen. When somebody's up like 14% and markets are just, sputtering around, I think it's critical. Look, characteristics of selling. You don't have to buy or sell the stock. Risk is is limited precisely to your comfort level. The one thing that we're so adamant about is how you actually get in there and mitigate risk. You're not going to use stop orders. You can vary time frames. Probability of profitability is high. Most of the time, you're not going to use those fixed hedges. You have hedges because it's a rainy day. You have hedges because it's like putting a sacrificial lamb into a volcano. If you live on an island and it's got a volcano, you're like, yeah, sure, I'll sacrifice a lamb a month to the volcano. It's the cost of doing business. But you got to understand the probability of profitability is so high. The hedge is just part of the business. It's the perfect strategy to enhance your stock portfolio, but it's also an excellent tool for those seeking returns to build an account. And new products, those MES that I was showing you, allow for the sale of options in nearly any account size. There are no day trading restrictions as well. Okay, and I'm not day trading. Look, do not let the options portion of this intimidate you. Let alerts do the work for you. Selling premium can be done for very minimal credit initially, okay, and very minimal risk. You can sell, premium and use these tactics over here with limited experience, okay? As I said, do not let the options portion of this intimidate you, because the way I see it, you're going to need these strategies for the foreseeable market future, right? I mean, options are going to be the quickest, the fastest, the safest, the easiest way to get where you want to go in the stock market. But you actually are going to have to apply yourself to some degree. But more importantly, TheoTrade now produces real-time alerts to walk you through and in and out of these strategies. And even if you have absolutely zero market experience, in a few hours, you can be off in trading. You just got to be prepared for what's coming. Look, this is what you need to know to successfully sell Ultima Premium for a living. Okay, underlying stocks or indices make the best Ultima Premium selling candidates. What was I using? Like seriously, what products was I using? Was I talking about, the ES, okay, the MES, what else could I trade? I was trading some bonds out there, okay? Anything else? I mean, seriously, like I could use SPY, but why even bother using spiders? These are better. These are better. This is better. I mean, it's about use of capital and how efficient you can become. What volatility should I seek out? Okay, too much volatility, you're dead. I'm going to tell you right now, if you get into markets that are seriously, seriously volatile, like people love to trade stuff, okay, where risk is way over their head. They just love it. They love it. And I'm like, why you want to be moth to the flame? Like, what's the ultimate goal of this business? All right. And I'm not trying to ask that facetiously. What's the ultimate goal of this business? Bottom line is to make money. I really don't care how you do it, but you want to be, okay, in a marketplace with your hair on fire all the time in volatility. You feel like you got to be in the game, forget all that crap. Just go out and sell some premium. Just be profitable. Like you got to forget all the garbage that goes on. Turn off the TV completely. You don't need to see NBC. What are they talking about? Like Apple? How many times a day can they have one person on bullish and one person on bearish? Apple's the whole market right now. Apple, Microsoft, they're a little Tesla, maybe some Nvidia. Okay. Amazon has bid lately. Google's actually on the bid lately. That's it, people. That's your entire market. Did I leave anything out? Oh, Meta, but still my heart. Okay. That's it. That's your entire marketplace right now. Is about 5 to 6 stocks that are responsible for the entire gain of the S&P. And you're worried about volatility? Okay, forget all that crap. I mean, seriously, you just got to go in there. You got to do the right thing. Got to sell some premium. Okay, get back, reduce risk, get back under the desk, and come out when the smoke is cleared. Because right now, this ain't a time to go out and buy stocks. Yeah, I mean, headed into a recession, the Fed hopes so. Right? They always say don't fight the Fed. I agree. I really do. I agree. Don't fight the Fed. Okay, recession is imminent. What options expiration do I select? Like, look at all the expirations on here. I used an expiration today that was 120 something days out. Okay, right? But look at all the different expirations today. It's amazing. There's 65 days, and I want you to see, I have positions in here, in here, in here. Okay, notice anything interesting? Why I have positions out there? Because people, that's what works. That's what works. And if you look at my MES position or my ES position, all right, it's the exact same animal. Okay, here we go. I got positions way out here, like 93 days out. Why? Because that's what works, right? What options, okay? What should be the delta of the option I sell? What should be the options I buy against my position? We show you all of that. How do I build the position? What I mean by that is, how many of those VIX spreads do you need versus how many options do you sell? Do I need a large amount of capital in my account to do this? Absolutely not, okay? What's the right amount of risk for me? We can actually fine tune that. What are the percentage returns supposed to be? 50%. How do I protect myself from market crashes when selling options? Things like VIX volatility spread. Hedges, people, you must hedge. Let me show you exactly what we do here at TheoTrade. TheoTrade creates recipes in trading, but now, and more importantly, real-time alerts when trade opportunities arise. Okay, trading's always about answering what ifs. What's a good stock or ETF candidate for you to sell premium? What's the correct options expiration cycle? How much capital do you commit to generating premium? What strike options do you buy? What strike options do you sell? How can I limit my risk? We have the answers to those trade related questions. Okay, we build recipes. When I say recipes, okay, Ultima, there's a class for Ultima. And that class includes a very definitive checklist. It's a checklist like if you were going to go fly, okay, a 737, okay, the pilot does not get into the cockpit and just go throttle up, let's go, people, sit down, shut up. That's not what goes on, right? They should sit there and they should sit down and shut up. Or it could be like Southwest where everybody runs as hard as they can to get in there, okay? Because if you don't get a seat. It's brilliant. Brilliant over there, push, shove, bite, okay? Which all happens on the flights. Pilot has a very definitive checklist. The checklist not only gets them into the cockpit, gets everything checked off, making sure all the systems are right, but then when they're in flight, you know what happens in flight? Absolutely nothing. Most of the time, the pilots sit there bored as can be, playing video games on their iPad. Yeah, wish that wasn't true, but it is reality. And you know what? Okay, very brief amount of the time, they've got that checklist there just in case something goes a little bit awry in flight. It's exactly what we do. We have a checklist. What if we go up? What if we go down? What if we stay flat? Not only do we have all of these different pieces of criteria to be able to get into the position, but once you're actually in the trade, we work you through, okay? And now we're taking it a step beyond. We're taking that criteria, okay, we're applying it and we're actually sending out alerts based on that. We'll give you the right probability. How many option contracts? When do I close a premium sell? What if we sell off big? Do I bail out of a trade? What if we rally massively? Can I fix a losing position? It's about how, it's about why, it's about when, it's about what price. And I'm telling you, it's just the beginning. That's just the beginning of the variables you're going to face. That's what trading is, the variables. What if we go up? What if we go down? What if we crash? Okay, do I have a hedge on? How much capital should I commit because the volatility looks a little low? Look, you can read what selling Ultima Premium is. You can, you can ask Chat GPT, what is Ultima Premium? And it'll give you an answer. It'll talk about volatility arbitrage and so forth. Okay, look, you can Google, 10,000 pages will come up about selling premium. Okay, not one of them is going to give you definitive criteria. Not one of them is going to give you alerts. 20 plus years trading experience. That's just me. And by the way, now officially, as of this month, I'm 25 years into it. At the beginning of June, I'm 25 years into trading, started trading in 1998. I had access to client order flow for over 15 of those years. I viewed and studied over millions of trading accounts. And we used to do this on a really broad, okay, like literally looking at order flow on a very broad spectrum. And I ran education for 15 years at both Thinkorswim and TD Ameritrade. We had the largest options order flow in the industry. Look, the alerts, Ultima alerts is your recipe for success. Okay. The following strategy and corresponding criteria requires the utmost attention to detail. We spent years, okay, working on Ultima, years fine-tuning the strategy, the setup, the criteria, okay, literally the criteria that walks you step by step through. And now we've actually taken it a step further into real-time alerts on the convenience of your mobile device. Okay, real-time alerts for the next 3 months, it's $297. Now I'm going to explain what comes with this and what TheoTrade is. Okay, but we've shifted strategy here at TheoTrade substantially, and we want you to know that. Okay, this is the Ultima Income Generator alerts. These alerts come directly to any mobile device. I don't care whether it's Android, okay, whether it's Apple, whether it's an iPad, okay. We can do text messaging and we can do push notification. Okay, for those of you that are not familiar with that, we have our own app. You will gain access to TheoTheta Small. You will gain access to TheoTheta. TheoTheta Small, okay, $5,000. You can do TheoTheta Small with as little as $2,000, but you need $5,000 if you're going to use an IRA. Okay, that's not my rule. That's actually the brokerage firm rule. You need $5,000 in an IRA, but you can do this with as little as $2,000. The TheoTheta, that you need $50,000 for. Okay, and you go, what happens if I have $15,000 I want to trade? Well, if you have $15,000, okay, whatever we send out, you do 3 times as much. That's it. Okay, but you can do this with as little as $2,000 in an account. Now you get text and push notification trade alerts for the next 3 months. We put our money where our mouth is. And by the way, you can go to theotrade.com/SKU, and I'll take you there, okay, in a moment. In fact, you know what? I have it up here because I want to show you something that's important, right? The Ultima Income Alert Service. You scroll down over here, click Add to Cart. Okay, and again, it's theotrade.com/SKU. It's S as in Sam, K as in Kick, E as in Echo, W. Theotrade.com/SKU. Put your phone number in so that we actually have it to send text messages. That always helps. Okay, it's $297. That gives you 3 months. This is not, and the reason I'm throwing this up here, it's not an introductory price. We do not ever bill you again. Okay, unless you want it. You go, what happens after the 3 months? If you want to do it again after 3 months, it's $297. Okay, or you can break it up into payments. Now, the reason I'm putting this up here, okay, is I want you to see, and I'm going to reiterate this. Okay, there are 30 riskless spots available today. What that basically means is we incentivize you to get into this today. There's a complete money back guarantee for the next 3 months. If you don't like it after the next 3 months, don't worry about it. Get your $297 back. It's one of the reasons we have like 6,000 clients. Look, here's the bottom line. At TheoTrade, we want people that truly want to be here. We want people that really want to learn this business. We want people that want to trade, okay, want to learn. At this point, though, I would agree that the markets are pretty heavy in terms of volatility. It's extreme out there. You get to follow the alerts while learning. For those of you that know anything about TheoTrade, you still get access to everything else. You're not just getting alerts. And I want to make that very clear. And I'm going to show you that here momentarily. You're not just going to get alerts for $297. We're still going to give you access to everything else we do here at TheoTrade. Allow me to explain. Again, if you're enrolling for it, fantastic. I'll talk about the money back guarantee in a second. The Ultima Income Generator alerts. I'm the trader for this. It's a positive theta, okay, premium selling portfolio, no holds barred trading approach. One of the things that I want to clarify here, everything that we do day to day, everything we do, you get to see it. I don't care whether I'm up money, whether I'm down money, win, lose, draw, okay? Whatever we're doing, it's no holds barred approach, right? You get to see the accounts. Full disclosure on all trades, opening, closing, and hedging positions. Full disclosure. Get to see opening, closing. If there's a loss, there's a loss. It is what it is. I'm in there with you. Every trade that we send out, I'm in there with you. Okay. You get to see me trade and discuss positions like never before. There's even weekly updates. We also have a TheoTheta small portfolio. Now, that, okay, is what you're paying $297 for. We're going to give you access to everything else too. We're going to give you access to our classes, okay, to coaching. One of the greatest things in here, email support. You can actually email us and say, like, am I doing this right? Okay. Email support is critical. For $297, look, you have nobody else to talk to. For the next 3 months, if you just emailed us a couple times, it's worth it, right? So we're giving you a full 3 months at $297. As I said, that's not an introductory price. After 3 months, if you want to do it again, do it again. Okay. I don't mind. right? How much is it after 3 months? Oh, it's $297. Okay. What about after that? Yeah, it's $297. Okay. We will lock you in at $297. I just don't, again, I like the no holds barred approach. It's what people want. They don't want to be locked into like a gym membership where they're like, I can't get out. I have to give blood to get out of the gym membership. So, okay, we're going to talk a little bit about it. In addition to this, and there's actually a really nice bonus here. One of the really nice bonus areas, okay, is we have grow a small account with micro options. This is a class that will be held live when? May 23rd. It's next Tuesday. We're exactly a week away from it, right? Less than a week away. Here we are on a Wednesday. It's 10 a.m. Eastern time. Again, 10 a.m. Eastern time, 7 a.m. Pacific time. Okay, live in the TheoTrade chat room, available immediately. Okay, following the live session. That is going to be the recording. This is a brand new class specifically, okay, on micro options to get you guys ramped up for this. Okay, this is a brand new class. Now, in addition to all of this, it's a completely riskless trade for the next 90 days. Try out the alert service. And I'm also going to show you other aspects, of course, of TheoTrade, but try out the alert service. If it's not for you at any point in the next 90 days, if it's not for you, just a full refund. Okay, look, there are no stipulations on here. I want to make this very, very clear. You don't have to call us. Just email support@theotrade.com. Look, people, the whole thing is $297. As I said to you guys, and I always say this time and time again, we are very adamant that we want people that want to be here. We don't want people that are just like, not going to do anything. Like, one of the things, okay, that we're good at right now is we send out alerts with people engaged. We're constantly releasing new classes and so forth. But for $297, you can go out and you could spend $30,000 on stock market education, $30,000 in stock market education. And I promise you that it will pale in comparison to what we can do here at TheoTrade, right? There's no stipulations to the money back guarantee. There's just no excuses, no commentary needed. You don't have to do a little dance. You don't have to make a little love. You just basically send us an email and we give you $297 back. Okay. That is for the first 30 people that enroll today. The Ultima alerts will come directly to your phone. I just want to show you this. Okay. This is actually our mobile application. So weird that it cuts out over there. I want to show you it and it won't show up. It's a TheoTrade mobile application. So you'll download the mobile app, okay, on the device of your choice, whether it's Android, whether it's Apple, it's fine with us, okay? You'll have full access to the portfolios. You'll be able to follow every single trade, both opening and closing positions. Now, of course, this is what everybody wants to see. The 2022 Ultima portfolio returns on a $50,000 account, 56.6%. Okay. By the way, somebody said, so we don't place trades to the class. No, you can place any trades. Okay. Your own understanding of it is probably, critical. Like, if you know nothing about trading, yeah, maybe watch the class first. Okay. That's just a little bonus on top of it. So this is the 2022 returns on a $50,000 portfolio. More importantly, okay, I never had more than 17,000 of the 50,000 allocated at any one time. Okay, it's 56.6% return. It's $28,314.75. Okay, that's basically what the dollar figure came out for. As I said, everything we do over here is completely like no holds barred. It's really important. All right, we also do weekly, okay, videos. Any move that I've made in the portfolio, okay, in a 12-minute video is updated every Friday. When I say any move, if I put something on, take something off, we're going to give you an update. In a 12-minute video, it'll recap everything that I've actually done. And I mention this because, well, it's important. Like, you want to know, hey, what has he done in the portfolio? Man, did I miss anything? Like, why did he make that move? Okay. And we cover all of that. In addition, this is what the actual text messages look like. Okay. Right. And somebody said, well, you do this on only one ticker at a time. Most of the Theo small are in the MES. Okay. Almost everything's in the MES and the Theo small because it fits, right? So this is what an opening order looks like. I'm selling 3,400 puts. It tells you exactly what to do, the exact credit, right? This, okay, is again, opening and closing orders. This is a closing order. So I want you to see, this is an opening order. This is a closing order. So when it's time, this is the opening order. When it's time, this is the closing order, close for 50% profit. All of it, okay, is kind of done for you. What do you have to do? Execute, just execute upon this. Come back over here, okay, closing order, another closing order. Again, I just wanted to give you a feel of what these messages look like. This is a two-part. Look, there's part one and part two. You go, why do you do that? Because in part one, we're closing an order. In part two, we're closing the hedge. So they're actually two separate trades. If we don't have a position on, we have nothing to hedge. So we closed all the positions like profitably, okay? And then we closed all the hedges. All right, like last one over here, right? Part one and part two. This is actually a really cool position. This is the mighty inflection point spread. Part one and part two. Look, part one, we buy a hedge. Part two, we sell a boatload of premium. Look at this. I'm doing a one lot hedge against a two lot sale. Okay. $30 credit actually is more like a $60 credit because it's times two. A little bit of a hedge out there. Okay. It's beautiful. This, people, is what you want to learn. Okay. This is what you want to learn. So I stress to you again, in every way, shape, or form. And if you have questions about this, like, as you're as you're getting set up and, after you enroll for it, email us. That's what we're here for. Like, and again, the emails, it's open. When I say like the emails is open, okay, we will help you walk through, okay, and understand the order types. All right. This comes from Pat. This is January 11th. Thank you for your reply. It's very much appreciated. TheoTrade is the first educational trading service that I'm actually making a profit with, and one which I see a pathway to retirement. Okay, this one comes March 30th. Obviously, a little bit more recent. My closed year-to-date profit from Ultima Trades has paid for my yearly TheoTrade subscription. Okay, another one over here. Okay, I want to thank you for all the different staff point of views. This year, I did more of what works and less of what didn't. Okay, thanks to your selling premium inflection point spreads, took $12,000 to over $32,000 in 18 months. Doing your method. And this is Ultima, comes from Jeffrey. Look, get into TheoTrade now. By the way, just based on the number of people here today, we opened this to 30 riskless spots. Now this we do to incentivize you to enroll today. Okay. And when I say that, I mean, like, we'll give you 90 days. It is 90 day. Okay. There's a complete money back guarantee. It's only $297. Okay. Anytime in the next 90 days, if you're not comfortable, just ask for your money back. It's okay. Again, we want people, as I said, that want to be here. As we're going through this, we have text messaging in the United States. We have text messaging out of Canada. If you're overseas, a lot of individuals, maybe like Singapore, Australia, we're fine with that. If you're in Singapore or Australia, what you want to do, okay, is download the mobile app and use push notification. Okay. Again, it's theotrade.com/SKU. Okay, theotrade.com/SKU. Now I'm going to answer a couple of kind of general questions for you guys, and then answer some specific questions for everybody to make sure that we get those questions answered for you, okay, in kind of a timely manner. Again, theotrade.com/SKU. Do not forget, not only, and again, I want to kind of go through this because I've already seen a couple of questions. Not only are you getting access to the portfolio, but here at TheoTrade, we have a live chat room, okay? I mean, this is part of it. When I say it's part of it, this is TheoTrade. If you want to take a quick glance at it with me, let's do it. Let's do it, okay? So in TheoTrade, there's actually a session, okay, coming up here. By the way, we're at the only break of the day is right now. Currency, debt ceiling, and the risks of default. Okay, join at the close with Brandon Blake live Wednesday. This is actually at the close. You can watch this today. This is a chat room where our clientele are not only discussing trades, okay, but we've actually got, okay, all of these are positions being called out throughout the course of the day. So we're constantly trading in here. Another huge aspect of this is you get access to our class archive. Okay, we have 7 years of classes in here. For example, if we go into option strategy classes, okay, option strategy classes, catapult, flyby, Z-spreads. This is the ultimate income generator. Look, you can learn everything there is to know about trading. As I said, the education inside of here, you could spend $30,000 in stock market education. It'll pale in comparison to what we do in here. Okay, to give you an idea of what classes and so forth look like, Let's click on the Ultima. Okay, come in here to Ultima. These are the actual archives. So what are we doing? Okay, class is live. All right, skip forward in here. Not only do you take you through the class, okay, but moreover, you can actually download the slide deck, look at the entire investment plan in here, okay, take you through specific criteria. This is opening and closing criteria, managing winning trades, managing losing trades, all of it is in here. And as I said, it's no holds barred, okay? We even show you the Q&A in here. This is a 5-part class series. You'll absolutely love it. Like, people go out there and they pay, $1,000 to sit through a 3-hour class or $500 to sit through a 3-hour class. That's all included here at TheoTrade. Like, again, every one of the classes that we've ever done, and it's not just option trading. Name a genre of trade, we have trend trading, pairs trading, hedging, mindset, okay? Our mindset actually comes from Slim Miller. That man has forgotten more about risk management and volatility than most of us will ever know. Bonds and futures, day trading classes, it's all part of TheoTrade. All right, so theotrade.com/SKU. This just comes from Robert. I like this one, and has to do with our ability to go in there. And he said, just wanted you to know a special experience I had with Brian Aponte. Okay, just getting started with the training videos, ran into a technical issue at 3:45. Okay, I sent an email to support group at closing time 4 p.m. Thought I'd have to wait till Monday at 4:10. His phone rang. It was Brian Aponte. Okay, we're on it when it comes to being able to answer emails. Most emails get answered within a few minutes. Okay, give us 24 hours though on trade related questions. We'll get answers to you. Anytime you ever need to bounce something off of us, we're there for you. Look, let's make sure we get these answered. All right. Oh, by the way, a couple of names are actually popping in over here. So it takes me about 5 to 10 minutes to see your name after enrolling. But for those of you, okay, there are 30. We actually bumped it up. There are 30 riskless spots left. Okay. Arnold B from California, Lewis V from California, Ronnie A from Alabama, Elliot C from Missouri. So the first just 4 names have actually come through. The individuals I just read off, first of all, thank you for obviously enrolling in TheoTrade, but those are names that have enrolled, okay? And we see you, so you should be receiving passwords, everything. I'm just letting you know that, yes, we see you out there. Just a few generalized questions I could answer. You don't need a lot to get started here. A laptop isn't even a necessity. You could probably have any type of mobile device these days. Okay, I love that. I pull up my mobile device and it shows nothing. Okay, any mobile device, all right, is fine these days with an internet connection. What we do here is not a membership. We're not going to bill or auto renew again. All right, we provide you weekly video updates for all the moves that we make. All right. By the way, there was another question about this, the auto renew. Again, after 3 months, if you want to do it again, it's another $297. That's it. Like, you make the decision though, but that's 3 months from now. Okay. We give you weekly video updates. The weekly video updates, just so everybody's aware, they're not like long and drawn out. Okay. It's about 12 minutes. I actually time them myself. I do all the videos, like I like to do them myself. Okay. We provide you access to TheoTrade Mobile. TheoTrade Mobile, the moment that you sign up, okay, for TheoTrade, you're approved for TheoTrade Mobile. So you can go download it at the App Store, immediately put in your username and password, you're good to go. You receive push notifications. By the way, another couple names are coming through. JP from California. Again, it takes me, as I said, about 5 to 10 minutes. Add your cell phone number when enrolling to receive alerts via text message. Okay, so I'll kind of reiterate that. When you click add to cart, go in here to add to cart. Come in here, make sure your phone number is in here because that is the number. It automatically gets picked up by our system for text messaging in there. So, all right. By the way, Gary, as I'm going through questions, was asking, I have an IRA account at Fidelity. Do I have to open an account at Thinkorswim? No, I would actually suggest if you were at Fidelity, go to Tasty. Okay. Tasty Trade, Thinkorswim is I don't want to say Thinkorswim is done because Thinkorswim is not done, but Thinkorswim now is Charles Schwab. And they're going to limit what you can do. Tasty Trade is the biggest, baddest up and coming brokerage firm. It's from the original founders of Thinkorswim. So Thinkorswim was built, sold to TD Ameritrade. The original founders, Okay. Left, started a company called TastyTrade. TastyTrade just sold for $1 billion to IG, and TastyTrade is huge now. I mean, they're going global. So this is the place that, if you looked 3 years out and wanted to know where everybody's going to be trading, it's Tasty. There's no question about it now. It's on over there. So push notifications, cell phone number for text alerts, email us anytime, receive a response within 24 hours, including trade related questions. Variations of every trade that we do can be done in an IRA, right? With as little as $2,000 though in a funded account. We can help you get approved for options trading at several major broker dealers. So don't worry about the brokerage side of it. And again, by the way, IG is actually a British firm, but the US operation's huge. So we can help you get approved for options at a couple of different firms out there, but there's a few that we highly suggest depending upon what you're trying to do. There are going to be 30 riskless spots left. So get results, take action, and roll for TheoTrade today. So that's here's another one. Because of Theo, closed my entire portfolio with profits, 0 loss. This actually comes from last year, comes from 2022, where it was duck and cover, and people are down 20%. Our clientele did phenomenally last year. So once again, I'll actually pull up this trade here, this page. Apologize. It's theotrade.com/SKU. Okay. Again, theotrade.com/SKU. Any further questions in here, I'm more than happy to answer them. By the way, Lawrence F. from Oklahoma, just letting you guys know, again, I see you as you're actually enrolling over here. Hit us anytime, support at theotrade.com, but it's theotrade.com/SKU to enroll. We'll actually leave this, we'll leave it open for just a few moments on here. Somebody said, does TastyTrade have FX? Okay. So interestingly enough, TastyTrade is building probably one of the most prolific currency platforms in the entire industry right now. Okay. It's all proprietary stuff. They're building all of it. It should be very interesting. It's out in a very, very short amount of time. We'll be out. Anyway, I want to thank everybody for actually tuning in today. By the way, if I didn't read off your name, as I said, it takes me 5 to 10 minutes before I see your name actually populate in here. Okay. You can, as long as you're receiving an email from us with a username and password, okay, you are in. We do have it limited. Again, it's 30 riskless spots left in here, limited number of individuals and spots to get in under the riskless deal. But thanks everybody for tuning in. Have a wonderful afternoon. Bye-bye.